The money is gone, but no alarm ever rang. A phone lights up in the dark. A balance refreshes, the number drops to zero. No password was typed. No warning was sent. How can someone take without ever logging in? This is not a story about weak passwords or careless people. It is about how modern banking actually works and how trust moves faster than security. Over the last few years, banks across the world have reported a sharp rise in account drain cases where victims did everything right. Strong passwords, two-factor authentication, secure devices, and still, the money vanished. Source, FBI IC3 Report, 2023. What changed is not human behavior. What changed is the system. Question, what would you notice first? The first warnings appeared quietly, buried inside fraud reports and consumer complaints. In 2019, U.S. regulators noted an increase in account takeover without credential compromise. The phrase sounded technical. The impact was not. Source, FTC Consumer Sentinel Network, 2019. Visual, evidence card with label plus date. By 2020, banks began flagging a new pattern. Victims insisted they never shared passwords, never clicked links, never lost devices. Investigators found no login failures, no brute force attempts. Source, Financial Crimes. Enforcement Network Advisory, 2020. Visual, timeline scrub with chapter dots. In 2021, losses accelerated. Authorized transfers, approved by systems, were moving money out at record speed. Banks recorded the transactions as legitimate. Customers recorded them as theft. Source, UK Finance Fraud Report, 2021. Lower third, authorized push payment fraud. By 2022, law enforcement shifted language. The problem was no longer hacking accounts. It was hijacking trust. Source, Europol Internet Organized Crime Threat Assessment, 2022. 2022, visual map animation with route. In 2023, global losses crossed billions. Not from breaking passwords, but from bypassing them entirely. Source, FBI IC3 Report, 2023. Visual, 3D map fly-through with timestamps. Card 1 comes from consumer data. According to the U.S. Federal Trade Commission, reports of bank fraud where no credentials were stolen increased steadily year over year after 2019. Most victims reported no malware alerts, no suspicious logins, and no password resets. Source, FTC Consumer Sentinel Network. Databook, 2022. Visual, evidence card with label plus date. Card 2 comes from banks themselves. Internal fraud reviews cited in regulatory filings describe cases where transactions passed every automated check. Correct device, correct session, correct authentication state. The system believed the user was present. Document, bank regulatory filing summaries. Card 3 comes from law enforcement. The FBI's Internet Crime Complaint Center separates credential theft from session abuse in recent reports. Losses tied to session-based fraud now exceed traditional password attacks in several categories. Source, FBI IC3 Report, 2023. Visual, info card, what we know versus unconfirmed. Card 4 comes from court records. In multiple fraud disputes, courts noted that banks processed transactions exactly as designed. The question was not whether systems failed. It was whether systems understood intent. Document, U.S. Civil Court Rulings, 2021 to 2023. Taken together, these records point to a clear finding. Passwords are no longer the main barrier between money and theft. Sidebar. Session equals a temporary digital hall pass proving you're already logged in. Not everyone agrees on what should be called hacking. Banks often argue that if a transaction was approved by their systems, then no intrusion occurred. From this view, the system worked as designed and the transfer was technically authorized. Source, Banking Industry Statements, 2021 to 2023. Consumer advocates disagree. They argue that approval does not equal intent, and that modern fraud exploits gaps between human decision-making and automated trust. In these cases, the system cannot tell the difference. Source, Consumer Financial Protection Bureau Commentary, 2022. There are also gaps in measurement. Many fraud cases are settled privately. Some are refunded. Others are not reported at all. This makes global totals difficult to verify and leaves room for dispute. Source, OECD Cybercrime Reporting Analysis, 2022. What is clear is what remains unknown. How many cases involve silent device compromise? How many involve social manipulation? And how many fall into gray areas no rulebook fully covers? InfoCard, what we know versus unconfirmed. Behind every data point is a person who noticed too late. For some, it begins with a routine check. A phone opens. The app loads. The balance is wrong. At first, it feels like an error. Source, victim interviews reported by major outlets, 2020 to 2023. Then comes the call to the bank. Victims often describe long holds, repeated explanations, and the same question asked again and again. Did you share your password? Did you approve the transfer? Source, Consumer Complaint Records, CFPB. For many, the answer is no, and still, the money is gone. In severe cases, the impact spreads outward. Rent payments fail, medical bills wait, trust in institutions fractures quietly without headlines. Source, UK, which Consumer Reports, 2022. Content note, this section discusses financial distress. Security experts often explain the problem with a simple metaphor. A password is a lock, but modern systems also use hall passes. Once the pass is accepted, doors stay open for a while. The system assumes the same person is still walking the halls. Source, Academic Cybersecurity Explanations, IEEE Publications. Another metaphor is the autopilot. Banking systems are built for speed. They cannot stop and ask questions every time, or money would freeze. So they learn patterns instead of people. Source, Financial Automation Research, 2021. This matters because trust has shifted. In the past, banks trusted secrets. Now they trust signals, and signals can be copied, borrowed, or misread. Historically, every leap in convenience has created a new kind of crime. Checks led to forgery, cards led to skimming. Digital trust is now facing its own test. Source, Financial Crime History Analysis. Visual, diagram of trust moving faster than verification. The final question is not how this happened. It is what happens next. Because the same systems that move money today will move more tomorrow. Faster, quieter, with fewer pauses. And the gap between trust and understanding is still open. Visual, timeline scrub slowing, then stopping. One possible future is already taking shape. Banks may continue to shift responsibility toward customers when systems show approved actions. This would keep transfers fast but disputes difficult. Confidence level, high. Source, Banking Policy Statements and Dispute Trends, 2022 to 2024. Visual split screen of speed versus responsibility. Another scenario is slow reform. Some countries are testing rules that require banks to reimburse certain fraud losses, even when systems approve transfers. Early results are mixed, with cost rising and fraud patterns adapting. Confidence level, medium. Source, UK Payment Services Regulations Updates, 2024. Visual, map with highlighted regions. A third possibility is technical change. Researchers are exploring systems that pause high-risk transfers, even after approval, to check intent. These systems reduce fraud, but also reduce speed. Whether users will accept that trade-off remains unclear. Confidence level, medium. Source, Academic FinTech Research, 2023. The least likely scenario is a return to the past. Passwords alone are unlikely to regain their old role. The system has already moved on. Confidence level, low. Source, Cybersecurity Trend Analysis. Question, what would you trade for safety? This story is not about fear. It is about understanding how trust now works in a digital world. Money moves because systems believe, and belief, once automated, is hard to question. If you want to explore this further, the next chapter is already unfolding. You may want to watch Why Banks Trust Machines More Than People. Sources for this film include public reports, court documents, and investigative journalism. As cases develop and rules change, updates may follow. Source notes and disclaimer. This documentary is based on publicly available information from regulatory agencies, law enforcement reports, court records, academic research, and major media investigations, including but not limited to reports from the FBR and Internet Crime Complaint Center, the U.S. Federal Trade Commission, Europol, UK Finance, the Consumer Financial Protection Bureau, and peer-reviewed cybersecurity publications. Dates and figures reflect the most recent data available at time of writing. No living individual is accused of wrongdoing unless stated in court records. Descriptions of fraud methods are presented at a high level for public understanding and do not include operational or instructional detail. This video is for informational purposes only and does not constitute legal, financial, or security advice.